Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Tuesday, December 13th at 1:43 p.m. here in Northern California. And in today's video, we're going to talk about how the market has responded favorably to the CPI report today. Let's just jump right into it. First of all, we see that this is the daily chart for Bitcoin, and Bitcoin broke bullish out of the symmetric triangle. You notice this ascending channel, and we've broken bullish in the RSI above it as well. And here is the news that has stimulated this break. U.S. inflation slows again. CPI shows as Fed prepares to raise interest rates. So interest rates have dropped to 7.1%, right? It's dropped from 7.7 to 7.1%. The numbers, the cost of living rose a scant 0.1% in November, the latest in a string of mild readings that suggest the U.S. worst inflation in 40 years is receding, okay? So when you see inflation starting to come down, that means that what the Fed has been doing to raise interest rates is working. And this means, literally what this means, this decrease that we're seeing in inflation, in the inflation numbers, means that perhaps the Fed will not raise interest rates all the way up to 5%. So this decrease in inflation that we're seeing is sending a signal across the markets that the US dollar may have topped out already or may be close to its top. Okay? So that is why we've seen a bullish break. So look at this. The CPI report came out at 5:16 a.m. is when it hit the news this morning. 5:16 a.m., which is 8:16 Eastern Time, 5:16 a.m. California time. What time did Bitcoin pop? Look at this big green candle. 5:30 a.m. You see that? 5:30 a.m. And already, 30 minutes before, it broke above this temporary area here. If you look at it on the 4-hour chart, you see that the break above this wedge here happened between 4 a.m. and happened between midnight and 4 a.m. early this morning, and then when the news came out at sometime after 4 a.m., boom, we got another green candle. So the market is responding favorably, and this just kind of underscores for us the fact that there's this inverse correlation between the value of the U.S. dollar and the value of other assets like cryptocurrency. When the value of the dollar goes up, the value of the stock market and digital asset market and all asset markets goes down. When the value of the dollar goes down, the value of asset markets go up. That's why interest rates are so important, because when the Fed raises interest rates, they increase the value of the U.S. dollar. It becomes more profitable to hold U.S. dollars than it does to hold assets. Dollars become more expensive. All banks do is sell U.S. dollars. And what do they sell it for? Well, interest is the price that you pay to buy U.S. dollars. That's really what banks do. They sell a product just like any other company, but their product in the U.S. is U.S. dollars. And so when the Fed raises interest rates, U.S. dollars become more expensive. When the Fed lowers interest rates, U.S. dollars become cheaper. However, the fact that we're seeing this temporary, breakout, I wouldn't get too excited about it. Simply my perspective. None of this is financial advice. But looking at the U.S. dollar currency index there, I'm seeing bullish divergence in the RSI, that even though the price is making lower lows, the RSI is making higher lows. And if you notice, the highs are getting lower, but the lows are getting higher, which means that we're seeing something of a little wedge going on here. And the bullish divergence suggests that the day of the dollar is not done, that there's still a little ways to go. Another breakout coming for the U.S. dollar before its days come to an end, before we can say it's time for the crypto market to break out completely and totally in earnest on its next bull run. I don't believe it's bull run time yet. If you look at this weekly chart for the U.S. dollar, I drew this line of support here and expected it to come down and touch that line of support. But then what I'm expecting, and I said this in a previous video, is for the US dollar to bounce here and make another run for the top before it finally breaks down. And this breakdown here is when we're going to see all major asset classes start to take off again. The stock market's going to take off again. The crypto market is going to take off again. We're going to see precious metals take off again. And this I'm expecting to happen. Forget the timeline that I drew. Forget the time frame that I drew that in. But I expect this to happen. I expect the top of the U.S. dollar to come sometime mid-2023, and then I expect the U.S. dollar to crash, really. Not crash immediately, but I expect it to go into decline. And once it goes into decline, that's when asset markets are going to start to burst again. So this is a cool day. This is really nice. This is pretty cool to see this nice little breakout here. I do expect us to probably come back and retest this line here. If we break beneath it, we'll retest this triangle here. And if we can break out, then we can see if we either bounce off this line here and break out or bounce back off the wedge here and break out, we can see a nice little rally in the crypto market temporarily, maybe for the next few weeks, couple weeks, till the end of the year, turn of next year. That'd be a great way to end the year with a little rally, even though temporary in the crypto market. That's what I see. All right, folks, thanks so much for tuning in. Do me a favor and hit that like button, hit that subscribe button. Let me know that you're watching. Send me a comment. Remember, this is not financial advice. I'm not a financial advisor. All of this that I say is my opinion only. Check out my Patreon at patreon.com/cryptogenic. But above all else, make it your aim to sleep in peace, wake in joy, walk in love. This is Cryptogenic, signing out.